Copper futures experienced their most violent collapse in history on Wednesday afternoon, falling over 19% within minutes around 2 p.m. Eastern Time. The sell-off, triggered by a White House tariff announcement, marked the largest intraday decline on record for the metal. Prices, which had been trading at all-time highs earlier in the day, were blindsided by an unexpected carve-out that rewired market expectations and erased weeks of speculative buildup.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci, and this is the Goldfix Market Rundown. It's 8:04, Thursday morning, after the biggest move lower in copper ever. Live by the Trump, die by the Trump. But it's very significant, aside from the size of it, for fundamentalists, for people that are going to be in the market for a long period of time, and for people who understand the reason the tariff exceptions were made. That's key to knowing if you should or should not be considering buying or selling if you are under any kind of financial stress in this situation. So we're going to go through that, lay some facts out, lay some information out, and then look at some charts. Okay, there's the homepage. We'll be discussing the top left-hand post. Trump admits China dominance, Nukes copper spec longs. And in little tiny print there, it says the M word. We just sent that out. We're also going to be going through the blow-by-blow of copper yesterday. Anyway, let's start with the markets, such as they are. 10-year yields are down 3 at 434. The dollar is 99.73, down 15. The S&P 500 is 64.20, up 26. The VIX is 15.14, down 33. Gold is 33.04, up 30. Silver is 36.59, down 50. Copper is 432, down 25 cents. That's 5.5%. WTI is 70.40, down 67. Natural gas is 298, up 1.5. Bitcoin is 118 spot 384, up 570. Ethereum is 38.39, up 29. Platinum up 10 at 12.23. I'm sorry, that's palladium. Platinum 13.11, unchanged offered. Gold, silver stronger and at a level that I'm concerned about again. And the grains are mixed and mild. All right. Let's just start, okay? Let's just go through what happened yesterday to catch you up, to give you some context, especially if you're focused on what Trump was saying and how it happened. And then once we give you some context, give you a prognosis for copper and silver, and to a lesser extent, gold. All right, so here we go. Copper futures experienced their most violent collapse in history on Wednesday afternoon, falling over 19% within minutes around 2 p.m. Eastern Time. The sell-off, triggered by a White House tariff announcement, marked the largest intraday decline on record for the metal. Prices, which had been trading at all-time highs earlier in the day, were blindsided by an unexpected carve-out that rewired market expectations and erased weeks of speculative buildup. There's the 15-minute chart. From high to low of that 15 minutes is about 21%. Give you an idea of the magnitude of the size of that candle alone. According to the official proclamation, President Trump imposed a 50% tariff on all semi-finished copper imports starting August 4th, 2025. Remember, that's the tariff, then there's the carve-outs. Traders had anticipated a broad-based crackdown on refined copper products. Instead, the surprise exemption of copper cathodes and other items, but cathodes were the most widely traded and imported form of refined or semi-refined copper. sparked a swift and vicious unwinding. Bullish positions that had been built on the assumption of tight supply were rapidly liquidated as the market digested the fine print. Now, while I leave this chart up so you can get an idea of the perspective on it, this is the performance of gold in gold, silver in white, and copper in rust orange, going back to about July 30th, to give you an idea of the magnitude of this move. Essentially, over that time frame, gold and silver are unchanged. A quick comment on the finished versus unfinished. We'll get into more detail in the end on this, but essentially, if you keep in mind from previous conversations, the U.S. is a large producer of raw copper. We have plenty of it. We're a big global exporter of it. What we don't have is the refinery industry to make it into finished product. Now, someplace between raw and finished product, there's semi-refined, and that's where it gets all gray. But the reality of it is this. Once it goes out of ore and into semi-refined, that's essentially refined. Because copper in semi-refined state is used to put in to cathodes. And once it's in the cathodes, it's refined. Or once it's in the battery, that has the cathodes. Okay, so just keep that in mind. Don't get lost in the details of raw, refined, semi-refined. Essentially, the labels are there to help the government draw lines on where they want to restrict access to foreign countries to get our stuff. Now, the administration's official rationale was framed under the Defense Production Act, DPA, which the president invoked to support domestic copper output. By the way, that's a war type of act. That's a critical mineral. Josh Fair had mentioned that in a video that we have of his as well. And this is all starting to come to a head. The order mandates that by 2027, 25% of high-grade copper scrap and raw copper forms must be domestically sourced and sold within the U.S., increasing to 40% by 2030. Excuse my voice there. These requirements are aimed at rebuilding refining capacity and insulating the domestic industrial base from any more external shocks. So, what is he doing? He's making sure no more scrap leaves the country. China's been buying our scrap under the radar for a decade, just like they've been buying concentrate under the radar in Mexico for a decade. Now, why have they not been buying silver from the U.S.? Because the U.S. doesn't make silver anymore. Okay, so keep that in mind when you're thinking about what happens to silver. It goes up. Now, he doesn't care about exporting raw material. What he cares about is he wanted to protect manufacturing, build manufacturing. But in the meantime, he can't use the tariffs yet because we need the copper to rebuild the manufacturing, the AI, the grid, the power, et cetera, et cetera. So this is by the numbers what he said or what he did. As of August 1st, 2025, a 50% tariff is in place on semi-finished copper goods and copper-intensive derivatives under a new executive order signed by President Trump. Number two, refined copper cathodes are currently exempt, though a phased tariff schedule is being waived, 15% in 2027 and 30% in 2028. I don't care about the deferred. Okay, deferred means we expect to be producing on our own and then the tariffs will kick in. As we become self-sufficient, we'll be importing less of your copper. Three, these new tariffs are layered on top of existing duties imposed under other executive orders, including those aimed at curbing drug trafficking and correcting trade imbalances. Essentially, there are layers of tariffs. You go after a country, That's your universal tariff. You go after the world, you go after a country on trade practices, and then you go after a commodity. And you pick how you want to sort your list, hair color, height, and weight, that type of thing. And you just pick and choose, and you create a grid that allows you to justify any prejudicial behavior you enact on other countries. That's just how you do it. Number 5, enhanced customs enforcement is mandated, with criminal penalties introduced for misreporting or underreporting copper content imports. Now, remember the External Revenue Service? That's what this is. So there are lists of things that are exempt or not exempt. It's basically a list of you can tax, you can't tax, et cetera, et cetera. And other countries will try to get around it by listing, a copper hummingbird as a cathode. Okay, so you have a copper hummingbird for your backyard. It's really a cathode, you say, and so it doesn't get tariffed. But the reality of it is, it's a copper hummingbird. It's not a cathode. So it's the cheating on taxes of other countries that we have to police now. And it goes both ways, but that's basically it. The Commerce Secretary's investigation concluded that copper imports pose a national security threat, citing over-reliance on foreign suppliers. Side note, how did that happen? Fragile domestic infrastructure and persistent global overproduction. That's a shot at China. The proclamation references a single unnamed country that controls more than 50% of global smelting capacity and operates 4 of the 5 largest refineries in the world. Now, that's the geopolitical story that we did called Mineral Wars. When we're throwing that out there, that's in the post, because this describes everything we're talking about here and all the behavior that it's accelerating. And country policies are reflecting a geopolitical mineral war, which we're having right now. So there's President Trump's quote. Let's fit that on the screen a little bit better. Today, a single foreign country dominates global copper smelting and refining, controlling over 50% of global smelting capacity and holding 4 of the top 5 largest refineries. For traders, the fine print was decisive. Copper cathodes were spared from immediate tariffs, but they were placed on a deferred schedule with a potential 15% levy in 2027 and 30% in 2028, still under review. That means our refineries have to get going. That move effectively kicked the can down the road on refined copper disruptions. The sudden realization that key imports would continue unimpeded turned the market's inflationary thesis on its head, unraveling long positions in a flash. Now, recently, there were a couple, I'm sorry, I don't need to read that. I already read that. The new tariff regime covers semi-finished copper products and intensive copper derivatives, effective immediately. It will be layered on top of any pre-existing duties linked to other executive actions, as I mentioned up top. Now, the announcement also includes provisions to expand the list of targeted copper derivatives and calls for strict customs oversight. Criminal penalties will be levied. Now, they're going to add things to the list that they're going to tariff as we become self-sufficient in them. As long as we need to import it, we're going to import it. Trump's proclamation explicitly links the tariff action to a national goal of supply chain resilience, autarky, self-reliance. It seeks to rebuild the American copper ecosystem from scrap processing to fractured geopolitical landscape. By preparing now for a more volatile 2030s, the administration is positioning the U.S. to withstand external coercion and assert control over key industrial inputs. So this is copper's moment. This is copper's oil moment. The metal is essential to energy transmission. Defense systems, electrification, and advanced manufacturing. That's silver too, The lack of substitutes for copper compounds its strategic importance. Yet the U.S. no longer makes cathodes. That gap in capacity leaves American industry exposed, and the White House knows it. By signaling future tariffs but holding off on cathodes, the policy effectively dares the market to front-run domestic investment while pursuing semi-finished imports in the meantime. What else does the policy do? It's a nod to the reality that you cannot tariff imports of things you need to rebuild your own manufacturing, lest you cut off your nose to spite your face. China has been preparing for these moments for a decade. Time for the US to catch up. All right, so we bring out the wheel for this. The blue areas are either literally or effectively what the US is doing. So government helps home industry to grow. They announced that. High taxes on imports of finished products. Okay. You tax imports on finished products that you're making. I mean, you want people to buy American cars, so you tax foreign cars. But we're not making cathodes. So this doesn't happen until we make it. As we start making cathodes, that'll be added to the list. Low or no taxes on imports of raw materials, or in the case of copper, semi-finished materials. Now, the risk here is what happens if another country decides to restrict exports to us? And that's happening. It's already happening. They're just not going to make a big deal out of it because that's how they negotiate with us. They don't want to embarrass the US. High taxes on exports of raw materials. Well, the US won't do that. The US won't use an announcement of tariffs restricting the flow of raw materials because that paints us as an authoritarian government that's not for free trade. What it will do is use one of those other tariffs, a universal tariff or a cherry-picking tariff on a country and say, you are unfair with your trade, therefore we're not exporting our copper to you. So it's how you label it or brand it. So, but that's what China's doing, right? What raw material do they have that we need? Rare earths. What raw material do we have that the rest of the world needs? Well, copper. We have a lot of copper. We probably have a lot of silver too, but we're not drilling for it. There will be no taxes on exports of our own finished goods. Okay. Now, if you're a patient investor, not a trader, okay, if you understand the fundamentals of the industry, you should be out there buying miners right now. Buying all the miners? No, you have to know which miners to buy. See, this is going to become you have to start big picture, macro. You've got to know the companies now. Okay, so guys like Dave Kranzler and people like him will do well because number one, you have to know, is the mining company run well? Number two, you have to know if the mining company is politically savvy and connected because the government's going to start handing out contracts. The government's going to start handing out favors. The government's going to start saying, hey, and I say this in a sincere way. Hey, you guys are this is a government. You guys are well run. We want you to make more copper for us. We're going to give you a tax credit, a subsidy, build a copper plant, build a refinery. And that's how it happens. So you have to look at who's best positioned to benefit from the industry because he may have removed taxes on copper, but that's not going to make us actually get any copper. The rest of the world's not going to give us the copper unless we give them something back. This is all so massively inflationary. So you want to start shopping for miners. And you want to start shopping for miners. The first point was that's well positioned, right? Maybe vertically integrated. I don't know. Like a big oil producer is vertically integrated, copper producer. You want to own a company whose management is well connected politically. Look at the board of directors on these companies. See who's on the board. See who they're on the board of. that sort of thing. So this is extremely, I can't think of a better opportunity for an industry. So, hey, we're going to remove tariffs so the price of copper goes down, right? Long specs get out. The U.S., everybody breathes a sigh of relief because there are countries out there that need to sell us their cathodes. And they're like, thank God I don't have to worry about the prices being so high and having to absorb those losses. But there are countries out there that couldn't give a shit, you know? So it's all about who's the weak hand and who's the strong hand. But when that happens, it's temporary because now we have to start building infrastructure to mine copper. Okay? And that's what's going to happen. Now, what's easier for us to mine in the US? I don't know the answer, but I would assume it's copper over silver. I think we have a huge mine that was shuttered by Biden. That's, whoever owns that, whatever. That's probably a no-brainer. I mean, I don't know. You have to look. But silver's not easy to mine for us here. Probably not. I don't know. But there's going to be a small group of companies that really know what they're doing, and those companies with cash flow will also be positioned to buy the other companies that have assets and resources. Anyway, I'm Vince. Oh, let's go to the charts. All right, so let's start with gold. This is the chart that matters to me now, all right? We're still in that range that we've had forever, okay? The market cracked the 50-day. That's not good, but there's no real negative slope to it yet. Remember, we cracked it above, too. We could go right back up to it. The key is the fact that it was bought last night. So we're $30 higher, flirting with the 100-day moving average. Now, it's significant because it's the 100-day moving average. And it's significant because it was bought the first time down. The last time I saw a knife catch that I really felt comfortable with was here and here. And this knife catch was the banks and traders that were covering shorts. They were trading their gamma. This knife catch came in here, and I wasn't sure if this was a trading or China. I think this is China buying in here. So it's possible that, considering that the market opened up $30 higher last night, or traded $30 higher last night in China, I think it's possible that we have hit our first level for China buying because this is where it was before. And we're in that area right now. So if we're still in a range, no sweat, we're going to go back up here, but not tomorrow, not today, not tomorrow. But if we crack through here, again, remember a couple months ago where the 50, 100, and 200-day moving averages were all dancing around each other? We could start another dance. I don't have the 200-day moving average here, but you get my point. We're in between moving averages, and let's see who has the nerve to do something right now. Silver. Silver stopped on the 50-day. Not a problem, right? Okay, so we know there are people buying on moving averages. Who are they? If they're funds, well, they're short covering. Probably not getting along. We'll see. Silver is a different animal than gold, especially with copper right now. Silver wants to break free of gold and go higher, as evidenced by the gold-silver ratio. Copper really dragged silver down last night, and silver is going to lag. So now you're probably going to see people put on those crazy trades I talked about again before. Anyway, I think here's my two-word notes. It could be a cruel summer. Can't believe I wrote that. We have to be aware of seasonality heading into October. Let's see if the 100-day moving average holds for gold. And silver is impressive. Considering, think about, if copper dropped 17% 4 years ago, silver would have dropped 17% just because they can. I don't think there's anyone who wants to sell silver right now. And so it's getting marked down. But I think it's time to go shopping for miners, shopping for miners, because the political aspects and the industry redevelopment aspects are key. Okay? You buy military companies in Europe because they need to make their own missiles. You buy mining companies in the US because we need to make our own metals. And in China, I don't know what you buy, but you buy something. I'm Vince. Have a great day.
Well, thank you, Vincent, as always, for this morning's show and one more fantastic recap of the gold and silver markets on what has certainly been a volatile last few couple of days, but hopefully this has been helpful as always and you enjoyed watching at home. We sure appreciate you being here, and before we wrap up, we did have some news from Dolly Varden Silver this week. Obviously, we give an update on Dolly each week and have talked about how they have their drill program ongoing. Although, as Sean Kunkin, the CEO of Dolly Varden, mentioned on his last appearance on the show, certainly they have a busy summer planned, and the latest news was that they've actually increased the scope of this drill program that was previously announced at 35,000 meters, has now been increased to 55,000 meters and will prioritize the Wolf Vein extension, where Dolly plans to continue to intersect mineralization on the step-out and infill drilling, and also the exploration targets at the Kitsault Valley and Big Bull projects. So especially at a time when the silver price still elevated, even if a little bit lower than last week, it's nice to see that Dolly is being quite aggressive after they've raised capital and getting out there and doing even more drilling. We'll be having Sean Kunkin back on here soon for another update. Although until we do have him back, I'll just mention what he says here, that with the strong support of our shareholders in the recently completed financing, Dolly is well positioned to significantly expand its exploration drilling based on a strong start to the season, which enables them to test key exploration targets and continue expanding the high-grade silver zone at the Wolf Vein. And that is today's news, because that's exactly what they've done. So will be exciting to see when the drill results start coming back. But again, just in case you are new to Dolly and like a little overview, here's what Sean had to say a couple weeks ago.